Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of business filings and reveal the juicy secrets hidden within them. Today we're looking at Accession Oncology, and let me tell you, their latest filing is less about growth and more about a big change. So what's the big news? Well, it looks like Accession Oncology isn't an independent company anymore. They've been bought out by another entity called Concentra Biosciences. This is a pretty massive shift and it changes everything for stakeholders. Let's dive into the nitty-gritty of what actually happened. On July 23, 2025, Accession Oncology finalized a deal where another company called Concentra, through its subsidiary merger, sub-acquired all of Acession's common stock. This wasn't just a simple cash deal though, for each share of Acession's stock investors received 0.36 in cash plus something called a contingent value. Right, now that contingent value, right, or CVR, is essentially a promise of future payments. It means that if certain milestones are met down the road, shareholders might get even more money. It's a way for the buyer to share some of the potential upside while limiting their upfront risk. The offer to buy the shares expired on July 22, 2025, and it seems like enough shareholders accepted the deal. Specifically, over 67% of the outstanding shares were tendered, meaning the minimum requirement for the deal to go through was met. Following the successful tender offer, a merger officially took place on July 23, 2025. This means Accession Oncology as a separate company ceased to exist and now operates as a subsidiary of Concentra. This type of merger, where a tender offer is followed by a merger to make the acquisition complete, is pretty common. It allows the acquiring company to gain full control efficiently. What about employees and their stock options? Well, it looks like all outstanding stock options were also affected. Options that were in the money, meaning they were worth more than the offer price, were essentially cashed out and also received a CVR. Even warrants to purchase shares received a cash payout based on a valuation method. Now for a significant consequence of this acquisition. Accession Oncology's common stock, which was traded on the Nasdaq stock market, will be delisted. This means you won't be able to buy or sell Accession stock on Nasdaq anymore. The company has officially requested Nasdaq to remove its shares from the exchange. They also plan to file paperwork to terminate the registration with the SEC and suspend their reporting obligations. This is a direct result of no longer being an independent, publicly traded company. And as expected with such a large acquisition, there have been some significant leadership changes. All of Accession Oncology's existing directors have resigned from the board. These were not due to any disagreements, but simply as part of the acquisition terms. The new leadership team is now comprised of individuals from the acquiring company Concentra. Kevin Tang has become the sole director and a new set of executive officers have been appointed, including a chief executive officer, chief financial officer, and others. This is a complete turnover at the top, signaling a new direction under new ownership. There's also a notable departure among the executive ranks. Tammy Furlong, who was serving as the interim chief executive officer and chief financial officer, has left the company. Her employment was terminated without cause on July 23, 2025. As part of a separation agreement, she's set to receive 12 months of her base salary plus her annual target bonus in a lump sum. She's also getting an additional $6,000, and importantly, all of her unvested equity awards have been fully accelerated, meaning she's getting those now too. This kind of exit package is fairly standard for executives when a company is acquired and their role becomes redundant. Finally, in line with the merger, Accession Oncology's official charter and bylaws have been amended and restated. This is a legal formality to reflect the new ownership structure and operational framework of the company as a subsidiary of Concentra. Looking at this filing from a broader perspective, it's clear that Accession Oncology has been acquired. For investors, this means their investment has been converted into a cash payment plus a stake in potential future payouts via the contingent value rights. For the company itself, it marks the end of its journey as an independent entity. The delisting from Nasdaq signifies this transition from public market scrutiny to private ownership under Concentra. The leadership changes are also a strong indicator of a new strategic direction. The key takeaway here is the completion of this acquisition, the 0.36. Per share cash plus the CVR represents the value that Concentra placed on Accession Oncology. While the exact future payout from the CVRs is unknown, this filing confirms the fundamental change in ownership and the end of Accession Oncology as a standalone public company. The company's future now lies within the strategy and direction set by Concentra Biosciences. It's a common story in the biotech and pharma space where smaller companies are acquired by larger ones to gain access to technology or drug candidates. We'll have to wait and see what Concentra does with Elevation's assets and pipeline Concentra Biosciences. It's a common story in the biotech and pharma space, where smaller companies are acquired by larger ones to gain access to technology or drug candidates. We'll have to wait and see what Concentra does with Elevation's assets and pipelines. Alright, that's our rundown of Elevation Oncology's latest filing. What are your thoughts on this acquisition and the move to private ownership? Let us know in the comments. If you found this breakdown helpful, give it a like and subscribe for more corporate decoding. And don't forget to join our Discord community linked in the description below. Thanks for watching. See you next time.